Welcome to the Trade Property Power Hour podcast. This is episode 1 of many, where we're going to be discussing the actual secrets in property and how you guys can go from startup to advanced. But more importantly, across this whole podcast series, we're going to be sharing with you the up-to-date market intel and how the property market actually works. So if anyone's curious about entering the industry, well, guess what? You're in the right place for that. Sitting to my left is my business partner and also going to be the co-presenter through this whole series, Kyle Huckabee.
Tom Lowe, how are we doing? So, a little bit about myself. I actually started out in property just going on about 3 years ago now. I mean, we started at the same time, didn't we? But a little bit about myself. So, I actually left school and went straight into bricklaying. I went straight into a trade and an apprenticeship. Now, I didn't really believe that bricklaying was going to be my career path for the long run. I just knew it was great to have a trade to fall back on if everything goes wrong. And about 2 years into the journey, I actually got made redundant. Well, the whole company got bought out, so all the bricklayers got made redundant. And I decided to screw off bricklaying and I went down another route. And I actually went down the route of landscape gardening. And that taught me an awful lot about myself. It taught me the ethic of hard work. It taught me that nothing in life comes for free. And if you want something, you really have to go out and grab it. So that being said, I ended up getting back on the trowel and setting off in our own world of construction. So about another 2 years in, I realised that I was making other people extremely rich while I was building these houses. I mean, these houses were flying up, timber frame builds, 1 to 6 week completion time, and they were selling for £300,000 to £400,000 a pop. And these properties were selling before they was even built, so it just kind of made me resent the trade, if I'm being totally honest. And I ended up getting off the trowel. And I ended up going into a sales role. I went into a telesales role because I knew the importance of sales and I knew how important it was to master that skill, especially for business and for entrepreneurs. So I started selling office supplies, and that was all a telesales role. So I was constantly cold calling, 100 dials a day, and I did that for about 6 months until I went full-time in property. But that's a little bit about my backstory before we actually go into our story in property. I mean, Tom, what about yourself?
Yeah, I mean, it's a great story to actually listen to be fair, Kyle, actually understanding and recapping, where it is that we've kind of come from. Myself, kind of similar background, really. So left school at the age of 16. I can't lie, I didn't do very well at all. I mean, academia wasn't for me in the slightest. So I left there, went straight into working for a 9 to 5. My career choice was recruitment. Recruitment actually taught me a lot because I was selling people, essentially. Now, not human trafficking, but, actually selling them to go and work in another role. We was headhunting and, poaching people from other companies. But that taught me a lot because not only are you having to take that sales process from, selling to the client to onboard them, to actually start recruiting for them in the first place, but also convincing people, this is the right move for you to come and leave your role and go over to the other side. And there's a lot of factors that kind of bounce around when you're trying to get both sides to work with you so you can get paid at the end of the day. It wasn't just a normal consumer role where you sell, you get paid, job done. I was trying to battle it from both sides, from dealing with the person that was looking for a new role and convincing the client to take them on at the same time. So that did teach me a lot about kind of how it all works and, more importantly, sales. So I ended up actually getting fired from my role in recruitment. I'd started all of this up with Kyle. We started the training company, the property investment company, and my mindset kind of shifted because Kyle and I had already spoken previously about trying to do something in our lives, and we wanted to get to that next stage. We wanted to level up, and we knew that working in a 9 to 5 role was never going to get us there, despite the best efforts of both of our bosses telling us that it was the biggest opportunity that we had. We sat behind that desk and working for them. Well, boy, wasn't he wrong. That's all I'm going to say. So my mindset kind of shifted really from recruitment, which was my sole focus. I was very good at it at the beginning, and then towards the end when I was setting all of this up, my interest kind of shifted, which naturally I ended up kind of being let go from the company. But in one way or another, it actually did me the world of good because it forced me to go full time into the business and start to really build it up, and that's exactly what we did. Now, for me, I just wanted to make sure that we could hit them goals. At the beginning, it was quite difficult to actually real home in on one strategy, because property as a whole gives you so many different opportunities that, you know, one might not be right for you, but the other certainly will be. So it's very much your situation dependent on which strategy that you really focus down on. And for us, our first one was actually rent to rent, that we kind of just nailed and said, right, let's run with this. Let's stop trying to look at going down BRR and looking at deals there in development and all sorts of different options. We said, right, okay, let's do this. And we just went for it, really.
But I think that's a massive, massive tip when it comes to property investing, because it's such a wide spectrum of different strategies that you can go down. But I feel like you do need to be really focused and lasered in onto one strategy to actually be successful in it. Because like Tom said, at the start of our journey, we was trying everything. We were booking viewings on developments, buy-to-lets, BRRs, flips, the list goes on. But it wasn't until we really focused on, it was rent to SA. Wasn't it?
Yeah,
wasn't
our
it?
first strategy.
Yeah, it wasn't until we focused on rent to SA until we really succeeded. And it took us 3 months to get our first deal, but we was pissing in the wind essentially for the first 2 months. And then it took us 4 weeks of solid, focused energy into rent to serviced accommodation. And then we actually managed to get the first one across the line. So that's a massive, massive tip for you guys, just to really focus on one thing at a time, nail that, and then go on to the next.
Absolutely. And just look how well that actually performed. For our first property, we got that from sourced to operational with a 2-week deadline. Which was quite good on its own. It only cost us £2,900 to actually get it all up and running. It had an ROI of like 650%. It was crazy. I mean, the cash flow, it was giving us £1,500 each month, so near enough. It's not far off the actual minimum wage just off one property. And I mean, look at what we actually achieved with that. Bearing in mind that was our first property, that was the #1 rated across the whole of Coventry. If you wanted to go and book a place, you know, that was the highest rated. It didn't get any better. So we didn't just compete in that market. We actually dominated every single other competitor that was currently operating in that strategy in the area. We just took that to the absolute moon. But obviously the stuff that we implemented made it passive, so we didn't really spend much time actually doing it. And obviously they didn't go unnoticed, really. We ended up getting them awards through booking.com, didn't we?
Yeah, so we ended up getting an award through booking.com for the fastest growing accommodation in the area. And I truly believe that's down to the USP of the property, if I'm being completely honest. So this was a 2-bedroom, 1-bath apartment, and then when you open the bifold doors, it overlooked the canal in Coventry city centre. Now, there weren't any properties on the market that did that, but that's another tip for you guys. When it comes to rent service accommodation, you need to make sure your property's got a USP, because you need to make sure it stands out from the crowd, because there's that many people doing it in the industry now. You just need to make sure that yours stands out from the crowd, and then you'll be able to succeed in it.
Absolutely. But I mean, just going back to what I was saying with my whole story. So going into property, for me, I started out with minus £50 in my bank account. So there's a massive misconception within property that, you know, you need a lot of money to get into it. You really don't. As I said before, the different strategies that you can go down cater to your current situation. So if you've got no money, there is options to how you can generate that money organically within property and invest that into an asset. I mean, you just heard me give the case study on our waterside apartment, £2,900 to get that started. Well, I'm sure if you could look at an investment opportunity that was going to give you £1,500 profit every single month, I mean, £2,900 is only a short-term down payment, really. I'm sure everyone could kind of come up with that. And for us, ours was organic. Ours was deal sourcing. We didn't have any money. So we had to go and find the deals and actually start selling them. And we realised, actually, you know, we was quite good at it. We was getting a lot coming through. But I mean, just going back from now, obviously my boss was saying that I had the biggest opportunity sat behind that desk, and now I actually make what was my annual salary on a monthly basis doing what I'm doing now. So that's all what I'm trying to say to you guys. If you are one of them people like what me and Kyle was, and you sat behind the desk, or you're on a building site, or whatever it is you're doing now, but you've got bigger aspirations in life, it was exactly our situation. We acted on them. Taking action is the first thing that you could possibly do, and it's going to pay dividends in the future. Because if you can take that action now, you're only going to reap them rewards 10 years later, rather than doing it in reverse. So the whole point of it is, if you're having them thoughts and you know that you can go on to achieve better things, then, you know, do it, act on it. That's the whole point of it. I mean, look at me. That's exactly what we did. We had to do it. We had to hit some milestones in order for us to grow. And that was like becoming financially free in just 9 months. So from when we started, we actually replaced our income working a 9 to 5 with something that was creating our annual salary on a monthly basis with just 9 months. So you can achieve it. It is out there. It's just for you to take action. We started, scaled and sold our first property business for 6 figures back in August this year. So for us, we actually built a little bit of an empire up around rent to rent. We'd executed the strategy to the absolute max. What we didn't know about rent to rent just genuinely wasn't really worth knowing about. And then that did attract some people. So we got a brilliant offer to actually someone come in and take our business offers, which selling a business at 23, I mean, Kyle and I, we look at things very, very critically. We understand, okay, what can we implement or what could have been better, rather than, looking back at our achievements. It wasn't till a mentor of ours actually said, lads, do you know what you've done selling a business at just 23 from, starting out probably 18 months just before? We were like, well, no, not really. And he really drilled into us the importance of having that natural skill to be able to start, scale, put teams and systems and processes in place to make it actually valuable enough to go and sell. So we've seen that as a massive achievement. Started that business with nothing. It grew organically to then exiting for, a handsome 6-figure sum. So we was very, very happy about that. But in regards to our portfolio, we controlled a £2 million portfolio. So it wasn't small at all. And then in regards to the sourcing side of things, we actually managed to source £96,000 worth of deal in just one day.
Yeah, let me just add on that. So me and Tom sat down and we really knuckled down on ourselves, and we thought, right, environment's massive. Everyone goes on about it all the time. How can we actually put this into practice and put it into a test? So me, Tom, and another 2 property entrepreneurs that we know decided to get together for 2 days and smash the phones all over the country, complete nationwide sourcing day. And then in the first day, we managed to secure £96,000 worth of deals. Now, that is an absolute unbelievable achievement. And that just kind of proved to us that when you are in that environment and when you are surrounded with positive peers that push you to go on and do great things can be achieved. So that's a massive thing. Environment's absolutely massive for us. Like, you are the sum of the 5 people you spend the most time with. So I think that's something you really need to be conscious of growing up and becoming the best version of yourself. Because if you're surrounding yourself with people that potentially haven't got the same goals or mindset as you, you're just going to get dragged back into that life. And that's something that we've had to take into consideration and action, essentially. So even that means moving away. That's something that we are doing. Recently we get the keys to our new apartment tomorrow, and that is just taking ourselves out of our old environment and sticking it into a new one, somewhere where we can really elevate ourselves and our personal growth. So that's one thing I just wanted to add in there, because that 96,000, I'm not saying we couldn't have done it, but that definitely was pushed by the energy of everyone in that room. I mean, would you agree?
No, I completely agree. I think you've just given an absolute massive point. There's that saying, isn't there? Show me your friends and I'll show you your future. And it's absolutely correct. Because like you said, you're the sum of the 5 people you hang around with. So really just take this time and think, okay, who do I spend my most time with? And then really look at their standpoint. Okay, and seeing, right, well, how can I elevate myself? In order to elevate yourself, you need to have a network of people around you that are wanting the same thing, that are wanting to go on the same journey, because you can reciprocate their energy, which will only elevate you to new heights and go on to achieve different things. So the point that you've just gave, Kyle, is absolutely massive. And, as a product of that, that's probably why in our first year of trading, we did 250K. Yeah. Just because we made sure that we weren't isolated with people that weren't going to help us go and achieve what it is that we wanted to do.
We isolated ourselves.
We did.
We isolated ourselves from our friendship group and then just surrounded ourselves with people, like-minded individuals in our network. I mean, we was attending networking events multiple times a month, and that was just kind of something to force us to actually grow, because we didn't like attending these networking events and seeing the same faces and having to explain to them that nothing had changed. So when you're putting yourself in that environment, you're getting some accountability there as well, because people that want the best for you, they're going to hold you accountable. I think that's another massive point.
Yeah, absolutely. Just the key takeaway is putting yourself in the right environment. But, after all of this, we did genuinely build a network up. Carl said network is the most important thing, and it really, really is. Your network is your net worth in property. So we ended up making sure that we could leverage as much as we could from our network. And that includes some of the largest property investors in the UK. There's not that if I needed something tomorrow, I can guarantee you there's someone in my network that can help me that probably like miles ahead as well. Do you know what I mean? So it's always about pulling people people up. Everyone wants to pull people up in this industry. And likewise, we do for our students. You know, we've helped, trained and mentored quite a lot of people along the way to replicate our blueprint, replicate what it is that we've done. And that's the same for us. You know, yes, we've now sold our business. Yes, we're still actively in property, and we're going on to do other projects. I mean, we're currently looking at that. We've got a hotel that we're currently looking at the moment.
Scotland. Yeah.
Potentially doing a lease option on. We're looking at
just secured a social housing contract as well with our local council. So now we're going to be providing temporary accommodation for our local council. And funny enough, we're still using the rent-to-rent strategy for that, aren't we? So we are now looking at actually renting blocks of apartments to give to this council. And they're just going to guarantee us, well, they've guaranteed us a nightly rate of £80 per apartment. And we're going to be looking around £1,000 to £1,500 profit with each apartment, which is absolutely fantastic. I mean, if we can we were looking at a block of 9, and if we can secure that 9, we're absolutely laughing.
Yeah, the thing is, that's really, really easy to systemize, isn't it? Especially when you're doing it to the council.
And it's guaranteed.
Yeah, exactly.
Guaranteed.
They do the majority of the work anyway. It would take us about an hour a week just to kind of keep on top of things and understanding where it's at. So, yeah, if you can get volumes of stuff like that that's guaranteed, then you're absolutely laughing. You can make it passive. And that's exactly what we're now trying to pass on to our students as well. There's endless opportunities out there, especially with rent to rent. There's something that might actually shock you. With rent to rent, a lot of people do it and a lot of brands do it. You might actually know some of these, but I can guarantee you will know some of them. You've got Premier Inn, Holiday Inn, Hilton, Doubletree, Travel Lodge. They all do rent to rent. Why? Because you can scale much quicker. You can scale your portfolio at a speed and get to that higher profit margin. I mean, look, like Kyle was saying, we're looking at blocks now rather than individual units. Why? Because we can get volumes. So if the money's guaranteed, might as well just top it all up.
Okay, so what's going on in the property market currently? So there's actually some new rules that have recently come into fruition, and these are rules of permitted development. So as of March this year, all these permitted development rules have been further relaxed. Now, this is absolutely great for us because it's allowing property investors, well, it's actually making it easier for them to get into property. So this now, with the use of permitted development, is actually allowing all commercial buildings in Class E to be converted into residential use. So this includes offices, gyms, doctors' surgeries, and the list goes on and on. So they are literally making it easier for you guys to get into property. But what else? So there's something that's going to be coming into place at the end of this month, and that's the October budget. Now, this may cause a lot of issues for property investors, especially if you're looking to do the BRR strategy, because they're actually, it looks like they're going to be inflating the prices of materials by a certain amount. They might be inflating interest rates. So I believe it's coming out on the 26th of October, or it's on the 30th. I'm not 100% sure, but that's definitely something we're going to have to look out for. And that's something that we are going to be covering in the next podcast.
Yeah, I was speaking to one of the directors at Utility Warehouse as well, and they were saying that apparently energy is going to go through the roof. So I think at the end of this month, I think it's going to start to be a bit of a hard time for people coming into the industry and regarding obviously owning their own assets. I think there's going to be a lot of factors that are going to prevent, higher margins to go and achieve. So I think we've got a bit of a tough time coming at the minute. But at the same time, I believe the house prices kind of reflect that at the moment, don't you? I think at the minute, I think the house pricing's really quite reasonable. I think as of next year, again, there's no way to accurately predict this because the housing market could go up, down, sideways in circles. So you have to just kind of do your own analysis on it. But I think we will start to see maybe next year a little bit of a rise, or maybe a big bit of a rise into the housing markets. But
yeah, well, after speaking to Alfie Best a couple of weeks ago, he currently believes that we are in the buyer's market right now. So he's currently purchasing property in central London, some of the most luxurious property you can get, and he's buying them for about 50% below market value. So taking the advice from a billionaire, yes, we are in a buyer's market right now. What's going to happen? We're not too sure, but one thing I do know is by 2028, property prices are set to rise by about 20 to 25%. So now really is the time to get into property. And like I said, there's so much opportunity in the market right now. You just need to know where you're investing and what to invest into. And then you can catch this rise, and you're going to catch a lot of money in the process.
Yeah, absolutely. Absolutely. I mean, I don't know if you noticed, I sent you over a commercial to Resi project earlier that looks quite juicy. There's just so many commercial units laying about because what's happened, let me just explain the commercial industry for a second. So since COVID, a lot of people haven't returned. I think it's about 25% haven't actually returned. And they've kind of just carried on working from home because they've realised as businesses it works. Maybe their overheads are a bit low without having to pay for offices or storage, etc. Whatever the industry it is that it may occur to. So all of a sudden we've got all of these units that are now sat there empty, but the housing market is so in demand because we completely can't keep up with it. We can't build houses fast enough. So like what Kai was saying with permitted development, there is now an opportunity to turn them buildings into residential to kind of help with the demand. And the government are making it really, really easy to go ahead and do that. So for someone that's just looking for something that's going to be a solid asset to go and convert, I'd recommend exploring the commercial to residential side of things. There's also another reason to why you maybe want to explore the commercial to residential side of things, because with a residential property, it's valued on a bricks and mortar valuation, which means it's done with comparables in the area and it's worth obviously based on the size, spec and location. But they're the variables that kind of come into play when doing a bricks and mortar valuation. But with commercial, if you're doing a commercial valuation, it's based on the rent. It's based on the income that unit generates. Now, if we've had all of these units that are sat there that are not doing anything, guess what? They've not got any rent coming in, which means the prices to go and purchase these are quite low. So there's a lot of opportunities to go and turn it into residential, whether you want to sell it or refinance it. There's a lot of money to be made there at the moment. So at the moment, I'd turn around and say, if you're looking to get into something that you could maybe do a refurb or you can convert, I'd strongly recommend exploring that market at the minute because there's a lot of opportunities.
Okay, so we're just going to go into a Q&A section now. So these are some Q&As these are some questions we actually got from our webinar last week. So we're going to answer them on here. So Stephen actually asks, what made you get into property investing and what keeps you passionate about it? So I'll start with this one. Back when I started my entrepreneurial journey, I actually started multiple businesses. I went down multiple different verticals. One of them was cryptocurrency trading. Don't need to go into detail in that because I lost thousands and thousands of pounds.
Yeah, a bit salty still.
Still a bit hurt from it, but we don't need to go down that. And I actually went into e-commerce. Now, I had my store all set up, ready to go live, ready to start pumping ads and making some money. But spoke to a mentor actually put in the community that I was in and said, right, everyone, it's Chinese New Year in 2 weeks. So in 2 weeks, the entirety of China are pretty much going to shut down and they're not going to start and they're going to stop supplying everything. And that's going to happen for 4 weeks. So for me, it was like, right, I've spent all this time building this store, doing all my market research, putting all the pricings together, and I'm not going to be able to do it for 6 weeks. And I was really, really motivated at this time. So I ended up, I was reading a book and it was one of my mentor's books when I first started. And there was a little call to action at the end of it, say, come and attend a discovery day. And that's exactly what I did. And then I attended the discovery day, signed up, and the rest is history. I never went back to e-commerce after that.
But what keeps you passionate about it?
What keeps me passionate about it? The ever-growing market, the ever-growing opportunities. I mean, the growth that I've seen financially and personally in the market is just unbelievable. That's what keeps me passionate. And the drive to be the best version of myself as well, and the fear of falling behind and falling off, I believe keeps me passionate about it. And then actually when you get to help others and you see them succeed as well, that's a proper nice fulfilling feeling. So that's something else that keeps me passionate about it. But what about yourself?
Yeah, passionate. I think the realisation of how lucrative the property market is, I'm going to give an example quickly. If anyone's ever looked at the Sunday Rich list or the Forbes 500, why do you think there's so many people on that list that says property investment? Because property is a get-rich industry. It's a get-rich slowly industry, but there's a blueprint that's laid out to say, okay, if you follow these steps, if you take the risk, take the jump, and just follow the blueprint, it will get you there, okay? But what does keep me passionate about it? I think that's a fantastic question. I think I've gained a love for the industry, not just because it's something that I'm actively doing and making money for myself, but I think I just absolutely love it. So for me, waking up knowing that I've got to go in, acquire more properties, I've got to go in onboard new prospects, I've got to go in stage properties, I've got to deal with whatever, I just genuinely enjoy it. So I think mine comes down to fulfillment more than anything. And I agree with what you're saying. I love training people. I like telling people our blueprint and how they can go in, do what it is that they want to do in property, or hit their tangible figure, or they might want a certain amount of assets. Well, we're laying it out for these guys, and we're literally making the blueprint and telling them, right, follow this step by step. We're making it as easy as we possibly can, but the fulfillment that we get from that, from people succeeding and people going, thank you, I've quit my job, I'm now making £10,000 a month, blah, 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 blah. I just enjoy that because I'm giving back. There's an old mentor once said to us, what's the quote?
He turned around and said that you have to be prepared to leave people at the bottom of the mountain if they're not willing to climb it with you.
Yeah.
And that really, really hit home for us.
Yeah.
And actually seeing these students decide to jump on the mountain and climb it with us, it's absolutely amazing because it means we get to pull people up and grow with them. That's personally and financially as well.
Yeah, absolutely. So next question's from Terry. What is rent to rent and how does it work as an investment strategy? So I'll start this one off. So what rent to rent is, I know some of you lot are probably thinking, well, isn't that subletting? It is if you do it wrong, basically. It's the change within contracts that you use. So you go from using an AST contract, which will be permanent residency, to a lease management agreement. So you're leasing the property. You're not going to be living there permanently. But what this does is it's through something called a company let or a corporate let. Whoever it is that you're speaking to, the pronunciation's different, the principle's the same. And how this is, you're going to go take the property on, and you might have a landlord that will want £1,000 a month. So you're going to guarantee him the £1,000 a month, but you're going to go and generate £2,000 a month. So you're going to pay the landlord what he wants, and you're going to keep the difference as profit. So that's a quick overall to rent. But the good thing about this is you can scale it up quite quick. You can get one of these from operational from 2 to 4 week deadline, and you can just keep scaling and scaling and scaling. So it's a really lucrative strategy. Now, there's different avenues you can go down with rent to rent. You can go rent to SA, service accommodation, where you rent the property out on a nightly rate on Airbnb and Booking.com. Or you can go rent to HMO, house of multiple occupancy, where you can rent the property out room by room to unrelated tenants as such. You can do this to students. You can do this to working class people, the professional people. Or you can go down, assisted living or supported living side of things and be getting service users in, or, people that may have just come out of prison. There's loads of different avenues that you can go down. Childcare for one. There's loads and loads that you can go down with rent to rent. But that does come under more social housing. Social housing is quite lucrative. Because what we can go and do is we can go and find a property. Now it's normally in like higher units, so apartments of about 12 or so, and you're going to go marry it up with a housing provider, and you're just going to be the middleman because they're going to go and do all the tenanting, they're going to do the maintenance, they're going to do the management, so they're going to do the day-to-day operations within the property. All you've got to do is go and collect the rent from them each month and go and pay the landlord what he wants. So essentially, you're taking a higher margin in the first place because you're dealing with more units, so you're going to be gaining more money, and you've not had to do anything. You've just been a middleman. You could really systemize that if you wanted to. You could make sure they've got a standing order set or a direct debit set, and vice versa. So if you didn't really want to go and communicate with them to go and collect the rent, you didn't have to. But because it's a social housing provider, the rent that you're getting is guaranteed as such. Now, this can be done through charities. It can be done through various different things, the social housing side of things. And social housing itself is a massive conversational topic because there's loads and loads of different avenues you can go down. There's some very, very lucrative ones. But, we'll actually do a bit of a segment about social housing at a bit of a later date because there's so many opportunities, again, within it that people don't even realise. But how does it work as an investment strategy, the second half of this question? So how does it work? Basically, in a nutshell, there will normally be a lower startup cost unless you're going to use a deal sourcer to go and find you these properties for you. If you do, in that case, you're going to have to go and pay them for their services. But if you did decide to go and use a deal sourcer, what they'll do is they'll go out and source your requirements. They'll go and find you a property that matches exactly what it is that you're looking for, what return you want to make. They'll do all the negotiating. They'll get all the contracts sorted, and they'll just give you the keys at the end. So it can really, really cut out the first part of this strategy. And normally it just depends on a couple of factors, whether you're good at finding deals and whether you've got the time to go and find deals. So deal sourcer is always kind of a good option that you can put into the mix. But if you wanted to go and do it yourself, then, you know, you've seen what we said earlier about our apartment that was £2,900 to go and get up and running. I think, well, we got an 8-bed up and running in Nottingham, actually, a HMO, and that was 3,900. So into three, what, sorry?
3,300.
Oh, was it? Well, yeah. No, even wrong. But what you can do with these is you can go and stack them up because they're a low initial cost to go and do.
That one's super lucrative as well. Super, super lucrative. Well, I can actually talk about this deal. So with our business, we actually specialised in a strategy called Rent to HMO. I know Tom's just explained it, but what we did is we went out and we found a ex-student property. And we decided, you know what, the student market is expanding and there is more supply, so there's more buildings being built. However, the professional market is declining. There is no places, due to the cost of living, no one can afford full market rent. So they're being forced to actually go into these HMOs and into these rooms. So we just took full advantage of that. And we decided, you know what, we found this deal. We ended up paying the landlord £80 per person per week. So that's per room. It was an 8-bed, so it was £2,771 for the rent. And then we ended up filling the rooms. We filled the rooms at £650 per room, and we had one room at £750. Now we paid £670 a month in bills, so council tax, water, energy, and Wi-Fi. And then we profited £1,771 from that one deal. Okay, £1,771. That's more than the minimum wage in the UK, and that's more than what I was on when I was landscape gardening. So it's a super, super lucrative strategy, to say the least. And like I said, if you do decide to build a portfolio of them, it is not difficult to scale to that 5-figure a month mark. I mean, we did it at a rapid rate, especially when we learned the ins and outs of business as well.
Yeah, no, you're absolutely right. Like for us, our first goal was £10,000 a month that we wanted to get coming through, and we did that really, really quickly. So rent to rent, you can just scale up really, really quick, is the whole point of what I'm saying.
Okay, so how much money do you realistically need to start when getting into property? And that question is from John. Now, if I'm being totally honest, it depends on what you're looking to achieve, and it depends on what strategy you're looking to go down. So realistically, you don't need anything to get into deal sourcing. You just need to get yourself educated. That is it. If you can get yourself educated, you're going to equip yourself with the skills to go out and find these high returning deals. And then you just need to get good at networking and get good at sales as well. Because then all you need to do is find a deal, network with investors, and then marry the two together. Okay? Now that's going to cost you as much as a training program is going to cost you. That is it, because you don't want to go into the market blind. But then if you're getting into rent to rent, yet again, you're going to need training beforehand. But for us, we never paid over £5,000 to get a rent to rent up and running. That's in the Midlands, bear in mind. Leicester, Nottingham and Coventry is where we mainly focused on. So it may be a little bit cheaper up north. It's going to be more expensive in London because rates are a lot more expensive. But it all depends on what strategy you're looking to go down. If you're looking to go into BRR, there's other ways you can do it. You can still do it with no money. You just have to go out and raise finance. But I couldn't give you a tangible answer to how much you're going to need to get into BRR because it depends on the deal. So you show me a property deal, I'll tell you how much you're going to need. But the answer is zero, because you can go out and raise the finance. You can go in joint venture. You can go and borrow the money. There's multiple ways you can do it. You just need to be smart about it. Tom?
Yeah, no, great point. There's again the common misconception that you need money to get into property. It's just not the case. If you really wanted to, you could go in. If you want to do a BRI, you could just go and raise the money.
Exactly.
You could theoretically, you could go and get an investor to go and give you the deposit for the finance, and then you can go and get the finance company to put the rest in. And there you go. You know money down already. Okay, so how do you choose the right area for property investment? So with us, that was from Sally. So with us, when we was choosing our patch, there was a couple of factors that came into consideration. One was travel. So we wanted to make sure that we was fairly close to our portfolio in case we needed to go over, or when we was prospecting new properties, we could go and do multiple viewings in a day. We wasn't worrying about driving 2 hours to go and do some viewing. So our patch was pretty much where we lived across the Midlands. We had the furthest away was actually Coventry, which is about a 50-minute drive. So we kind of kept it all in a roughly similar area. But the main factors when you're considering your patch is who your end user is going to be, number one. So if you're going to do HMO, but you're going to go in, do it. You only want professionals, but you've got HMO slap bang in a student area. But when you go and do your due diligence and your numbers, there's no one that's looking professional wise in that area. Then, already you've identified that that's not the right area for you. So demand's one. Employment rates are definitely one. If you're going to go down the professional side of things, you want to know how many people in your area are actually in employment, who your demographic is, and who you can potentially market the property to. Amenities, so what's around you. Is it going to be a good area for someone to come and relocate or to live? Is there opportunities? Is there hospitals? Is there schools? Loads and loads of different factors about amenities. Unemployment rate and crime rate is also a factor that you want to be looking out for. You definitely don't want to be acquiring a property in a ghetto and it's going to get smashed into a couple of times a month, because that's not going to be a good investment opportunity for you guys. So there's a lot of factors, but the main one that I'd say to you guys is, how far would you be willing to go and travel? Because if you live in London and you've got a property up in Newcastle, but you've got a guest that turns around and says, oh, well, I'm missing a towel, the cleaner's not put one in, but the cleaner's gone on holiday, are you really going to want to go and drive up from London to Newcastle to go and drop a towel off? Is the honest answer. So that was the main factors involved when we was choosing our area. But the one thing that I've not mentioned, which is the biggest, is demand. You need to understand your area's got that initial demand, because if it hasn't got a demand, you're not going to be able to get people in. If you're doing a HMO and there's no demand, you can't get people in your rooms. If you're doing service accommodation, but there's nothing to really come to the area for on a nightly basis, you're going to go get no demand. So there's loads of different ways that we can go about checking the demand to make sure that an area is right to invest into. We talk about this a lot on our training program in depth with our students to make sure that they really, really know how to identify if the patch is going to be worth investing in. Because if you go and invest in a bad patch, maybe you don't know how to go and look to see if an area is right investment, then you're going to lose the money. We've done it before. We invested in a bad area. We lost a lot of money. But it's these lessons that you take into consideration that are invaluable, rather than just writing it off as a loss, because that was a big lesson for us in regards to choosing that demand. So that's the kind of overall and the factors that you want to consider when you're choosing your patch for you. But as I mentioned, if you want to really know how we can do this in depth, then you just have to reach out to Kyle and myself and we can kind of talk you through it.
Okay, so what are the pros and cons of self-managing a rental property versus using a property manager? And that question's from Jonathan. Jonathan, it's a great question. It's an absolutely fantastic question, but you need to know how to self-manage, because you're going to know if the property manager is going to pull the wool over your eyes.
There's some that will.
Because there's some that will, and there's some that was going to charge you an absolute extortionate rate to do so. So we know, for one, that it costs £21 to get a reference check done. And we've actually been quoted from letting agents before. They've turned around and said, right, it's £500 for your reference. So hang on a minute, £500 for a reference. So if they're doing that,
what do? We just went, tell you what, we'll run the reference for you. I'll give you the list and save myself a little bit of money. But like I was saying, there is people that will genuinely try to pull the wool over your eyes in the industry.
Well, yeah. Well, you imagine, let's just say you've got a HMO, but this letting agency is charging £500 to each one of the tenants to do a reference check. You're never going to get them in your room. It's probably costing them £500 a month in rent anyway. But what are some of the cons of self-managing is you're going to have to do everything yourself. I mean, self-managing serviced accommodation units can be a bit of an ask, because are you going to be the one that's dropping off these spare towels? Are you the one that's going to be answering all the calls and doing guest communication?
Chasing the key when someone goes off with it.
And without sounding horrible, when you do actually manage serviced accommodation units, you realise how stupid some people actually are. I mean, we had a board as soon as you enter the property with all the information on it, Wi-Fi code, etc. It's how to work the TV, how to work the heating. Everything is on there. But yet you'd still get someone ringing you up at 11:30 at night asking you for the Wi-Fi password. Or people just don't listen, and people don't actually look at the pre-arrival information pack. You can make it as simple as possible, but people will not read it. And that's one con to self-managing. But like I said, when it comes to the pros, a pro of self-managing for HMO, you get to pick and choose who you're having in that property. So that's a massive, massive thing, because you definitely get a feel for the person as well. And then you know you're not ripping them off when you're doing the reference checks and everything else in between. But for me personally, if you're just starting out, I'd highly recommend self-managing. And then as you grow and as your property portfolio grows, then look to hire a property manager, because then it's going to make it a lot more passive. But you need to know the foundations to management so the wool doesn't get pulled over your eyes. And you know you're actually paying someone to do their job correctly as well. I mean, Tom, would you like to add anything?
Yeah, I mean, the biggest takeaway from that as well is when you're self-managing yourself, your margins are already going to be higher because you're not having to give a percentage. When you've got someone that's managing your property for you, on average, they'll take a percentage. This could be anywhere from 8% to 20% of the turnover of that property, okay? So when you do get a portfolio to quite a large position, it might actually be worth you just hiring someone yourself to come into the business, because that way you can train them up to basically be another version of yourself and understand that the management is done correctly, rather than having to bounce around from agent to agent to agent. And there's a lot of incompetent ones out there. So that'd be my advice, but I'd weigh it up. I'd understand what people are wanting to go and do the management side of things, and just see if it's even worth hiring someone to come into the business on a full-time basis to do the management, to do the viewings, to get a tenant into a room, to do the rent collections and to deal with any problems. Because to me, I'd say that it was more worth hiring someone rather than outsourcing it, because at least you know that you can train them up correctly to go and do exactly what it is that you want.
But I suppose that depends on how big your portfolio is.
Exactly, yeah.
Because if you've got a portfolio of 4 properties, you're not going to
No.
You're not going to manage someone. But we know people equally in the industry that have got a portfolio of 300 properties. And then if you have got one of them, it is a great idea to actually hire someone into
I would
the
highly
business.
recommend that, because I think I love the industry, I love property, but I think managing 300 properties would be my idea of hell.
Yeah, but in terms of rent to rent, you definitely need to self-manage. Especially when you're starting out as well, because so many things can go wrong if the management isn't there. So rent to rent, self-manage. If you're doing a buy to let and you haven't quite got the time, you can look to use a property manager. But make sure you do vet these property managers as well, because a lot of them are incompetent and some of them are absolutely amazing. So
yeah, there's never any in between, is there?
No.
Cool. So Rachel says, how much money do you realistically need to get started with property investment? I answered that question earlier.
Yeah, did we answer this one?
0. I said this at the beginning. When I started, I had minus £50 in my bank. It depends. How I view property is it's on a ladder system. And where you enter depends on your financial situation. So let's just use this as an example. Bottom of the ladder, you've got deal sourcing. Deal sourcing is where you can start to bring investors on board that may want to be looking at your services. They may not have the time to go out and source the properties. You can go and start sourcing them and charging a fee for that. You can then collect that fee, keep it separate, and keep it saved up to then go on to the next step, which would be rent to rent. You can then go and start putting that money that you've got from deal sourcing organically into your rent to rents to go and start generating you a bigger return. Like I said before, our apartment gave us a 650% ROI. So it's a massively, it's a brilliant investment option. So once you've then started getting the return from your rent to rent, you could then go and use that money to go into your buy, refurbish, refinance or your flips. When that starts cash flowing, your money coming through, then you can then work up the ladder and go to like developments as such. So where your financial situation really, really depends on where you enter on that ladder. For us, I had nothing. So I can speak from our experience because we've done the whole process organically. I had nothing, so we started deal sourcing and we started selling the deals to get money coming through. The money then started to pay for our rent to rent and so on. And we worked up the ladder system that way, okay? So how much money do you need to get started in property? 0. If you wanted to take that second step up the ladder and you want to go rent to rent, you want to do it yourself, £3,000. It could be anywhere from £3,000 to £10,000, depending on the area, depending if you use a sourcer. There's a lot of factors that are involved, but to answer your question in simple terms, 0.
Okay, so how should investors prepare for unexpected issues like repairs or vacancies? And that question's from Chloe. So, Chloe, to answer your question, it's to budget. It's to budget like 10% of your property's turnover and then just stick it into a savings account, because you will have vacancies and you will need to repair certain things. Now, one good thing, holding your properties or your rent rents in a company, well, you have to hold your rent rents in a company, you can actually claim back the repairs dependent on them. So let's just say your tenant breaks the oven, you're going to be able to claim that cost back. However, you can't claim the cost back of vacancies. So it's always a great idea just to put 10% aside, leave it in a pot for months when you do have vacancies. But that's why we recommend like your HMO and your service accommodation, all your super rent strategies, because if you've got a buy to let that's only making you £200 to £300, but you're paying £800-900 on the mortgage, 1 month for a vacancy is pretty much going to wipe your profit for like 10 to 12 months. So I'd recommend just going into the super rent strategies. I mean, we're actually going to be getting into buy to let versus BRR later on in the podcast, but yeah, hopefully that answers your question. Just to budget for it, put 10% aside and you should be absolutely fine.
Okay, what are your top tips for negotiating property deals, Nathan? It depends what kind of deals. Everything within property is subject to negotiation. If you're going to go and buy a house, guess what? The price is negotiable, and so is the terms that you can go and do it on. There's loads of different tactics that we could use to go in about negotiating on property deals. But the big thing about this, I'm going to go off a bit of a tangent on this, but when we're looking at the price of properties anyway to go and purchase, the asking price and the guide price doesn't necessarily mean what the house is worth. That's up for you to go and find its true market value. Because for all you know, an agent's put an inflated price on that, but it may not be worth that at all. So the key thing to that is before we even start going about, negotiating on property deals, it's understanding what that property is actually worth. Now, with negotiation, yes, you'll have to use it when purchasing a property, but the biggest one that you'll have to use your negotiation skills on is definitely rent to rent, and that's where your sales skills are definitely going to be needed as well. Communication is massively important because don't forget these agents, they're getting calls. Well, we started a letting agency and we actually got more calls from rent to rent than what we did from normal people that are looking for a permanent place to go and stay. We used to have a bit of fun with it, didn't we?
Yeah.
To be fair, because obviously we was directly doing the strategy as well. We would deal with sources, but Carl and I have got, I'd consider, quite good sales skills and negotiation skills as well. So we'd go and kind of have a little bit of a play with it and see how far we could kind of take these guys that were calling us. So we could then go and learn from that as well. I can't say I did, but it was that opportunity.
I think it's just shown us how good our script and how good our blueprint in terms of rent to rent actually was.
Yeah. Absolutely dominates what we see on the phone. So Nathan, I can't give you my direct tips. If you want to come and work with us though, Nathan, and you wanted to come in, be a part of our team, I'm happy to give you everything you possibly need. But yeah, the stuff that we've got for rent to rent and how we actually go about conducting and onboarding rent to rent, it's absolutely second to none, our process and how we do take that. So as I mentioned, happy to share that with you, Nathan. If you did want to come and work with us, I'll teach you the absolute blueprint.
Okay, so what advice would you give to someone just starting out in property? And that's from Haroon. Okay, great question, Haroon. Best tip of advice I could give is get educated for one and take action. Get educated and take action on that education, because if you don't, it's just going to slip away, because the best way to learn is to do. Okay, so you're going to be learning these strategies, but when you're doing it, you're going to learn a hell of a lot more. So, and be consistent as well and persist. So if you are hitting the phone for rent to rents, make sure you're consistent. Make sure you're hitting the phone every single day. I mean, we used to sit in the car on our lunches and hit the phone. That's what we used to do. And we did that every day. I remember going on like 2 weeks, not even getting a yes, being sat in the car.
That's right.
And then right at the beginning. And then eventually, a day or so later, I got 3 yeses out of 4 phone calls.
Consistency.
So consistency and being able to persist as well. And another one, I know it's quite ironic, and a lot of people say it, but self-belief as well. You actually have to believe that you can achieve what you're setting out to do, and you actually need to be able to vision yourself achieving it. You need to be able to see yourself in that winning position as well, and then that's just gonna take you to the next level. I mean, Tom, would you like to add anything?
Yeah, changing your financial thermostat would be the first point that I would kind of go down. If you don't know what this is, it's how you perceive money. It's how you perceive the value of money, okay? And if you're starting out or you're in a 9 to 5, you want to be kind of having that mindset shift, really struggling to say that word today, mindset shift into basically already being rich in your head. If you're already rich in your head, the rest will follow. The way that you present yourself, the way that you hold yourself, the way that you speak, the way you conduct yourself, and more importantly, the way you conduct business. Because if you're already there in your head, the rest will follow. If you've then got negativity on your head or you've got that doubt, then unfortunately it's not going to go anywhere. I'll use this example. Let's just say you just got married, and straight after the wedding day you're going, this marriage is going to fail, this marriage is going to fail, this marriage is going to fail. What's going to happen? The marriage will fail. Because you've told yourself that, so it will happen. If you tell yourself, I can do this, I can get to that next step, I want to make an extra £10,000 a month, I'm going to do it. That self-belief and accountability, like Kyle said, and having that mindset in your head will take you there. But action and education plays a massive part in it. I'd definitely say do not go into property unless you've got someone that's educating you, or you've already got experience in there, or however it is. I just definitely won't go in blind, because it can just absolutely demolish you. You will lose a lot of time, you will lose a lot of money, and you'll just be perceived as a cowboy in the industry. And that's one thing that you don't want to do. You will never come out from underneath it. So Haroon, I love the fact that you're taking action. Congratulations for wanting to get into the property industry, but just make sure that you ring fence yourself before doing so, bud. Okay, how do you stay motivated and focused on your property goals? That's from Cole. Would you like to start that, actually?
Yeah, I can start that. So number one, you're never motivated every single day. You're never motivated. It's staying disciplined towards your goals. And how I actually stay focused on is I just remember why I'm doing this. Okay, you need to think back to your why. Why do you want to become financially free? Why do you want to become financially independent? Okay, why? What is your reason behind it? Are you doing it for your kids? Are you doing it for your girlfriend? Are you doing it for yourself? Are you doing it to prove other people wrong? You need to think back to your why. And then make sure you're turning up every single day. And even if it means doing a little bit, okay? Because then it falls back to consistency. And if you're consistently working every single day on your goals, over time, the compound effect is going to kick in and you're going to achieve them, okay? So how to stay motivated, I'll be honest, I'm rarely motivated. It's more disciplined. It's more.
I'd agree with that.
Yeah, it's more, I have to do this no matter how I feel. That's what I'd put it down to. I mean, what do you think about it?
Yeah, I think the word motivated gets thrown around too loosely.
Yeah.
Personally, I think everyone says you need motivation, but I completely agree with what you've just turned around and said. I don't feel motivated every single day, but I've got discipline. It's discipline to show up every day. It's discipline to understand where you've come and where you want to be. So I would rather say the word disciplined rather than motivated, because what even is motivation? The urge to go and get up. Do you know what I mean? It's a very, very loose term that I think is associated around too many things that don't really complement it very well. I'd say the word discipline. So let's rephrase that. How do you stay disciplined and focused on your property goals?
Okay, so how do you stay disciplined? I mean, first of all, you just need to discipline yourself in certain manners. So getting up at the same time every single morning, making the bed every single morning, going to the gym every single day, eating correctly. These are certain things that will just keep you disciplined. And then if you set yourself tasks like call 5 agents a day, or complete how many courses on my property program, or read X amount of pages in a book, you just need to make sure that you're doing that and discipline yourself in the easy things, and you'll be able to keep yourself disciplined in the harder things. But another thing to keep you actually motivated and focused, I'd say, is accountability. So you need to find someone that's going to hold you accountable to your goals, okay? Now, whether that's a mentor, a partner that you're doing it with, a friend, your life partner, you need to find someone that's going to hold you accountable, because then if you haven't completed on what you said you're going to do, someone's going to hold you accountable for that. And then
pull you up on it.
Yeah, and pull you up on it. And then you can even put a bit of a financial motivator in there. Okay, so if you don't complete this by that date, you have to pay for the next time you go out for dinner.
Yeah.
Or just, you can add certain things to go in there, but
I completely agree with that. I think the biggest thing that you'd want to kind of implement into your day is, before you finish your day and before you go to bed, I would make sure you've got a list of things that you need to complete tomorrow that's going to be crucial for achieving that next step. And then you basically saying, I have to complete this list, and looking at the end of the day, and if it's not all ticked, then, something needs to change within your mindset or within your life to make sure that you can commit to making sure that you do exactly what you've told yourself you're going to do. I think that's definitely the big one. So just having a bit of structure within your days and within your times to say, I need to do this or I have to do that, and just making sure you stick to it is the biggest one. Because if you don't, then unfortunately getting to your goals is going to be much harder. And having a time frame behind everything. Elon Musk turns around and says, if you give yourself 6 months to go and clean your bedroom, it will probably take you 6 months. If you give yourself 6 minutes, it will take you 6 minutes. So having a time frame behind every task that you do, I promise you now, if you do that and you're already an action taker and you're already motivated and focused to try and achieve your goals, if you put that structure into place, it will take you where you want to go.
Okay.
Cool. So what we're going to do now is we're actually going to be debating a couple of points. Okay. So there's, as I mentioned before, there's certain things within property that people will either love, hate, will have the opposite effect or a different view or want to do a different strategy per se. So what we're going to do is we're actually going to go through a couple of these topics, and Carl and I are just going to debate a few points, because what this is actually going to do is, if you're already doing one of these strategies, it might give you an insight to diversify your portfolio, or it might give you a reason to go and take on the other strategy or take on that other option that's there. Rather than you just hating it, you might be looking at this with an open mind and saying, okay, well, actually, that does make sense. I can explore it. So what we're going to try and do is really, really widen your horizon within property and around these subjects as well. But more importantly, you're going to get to see a full breakdown debate. So first on that list is buy-to-let versus flipping.
That's BRR we were doing, weren't
Yeah, we're doing BRR. Yeah, ignore that. So buy-to-let versus buy, refurbish, refinance. Which is the better strategy?
Well, there's only one answer.
There is. Kyle, you take buy-to-let. I'm going to take BRR.
Okay, let's do it.
Let's do it.
So
yeah?
why? You tell me, why is BRR better?
I think BRR is better because it's a long-term holding strategy. You're going to be able to pull out refurb costs if numbers done correctly. So you can be left with a free property that's only just taking your time or energy to go and accumulate. However, there may be some circumstances where you might have to leave some money in the deal. Not all deals are all money out. Okay, they are out there for you to go and find. But if you have to go and leave £5,000 or £10,000 in a deal, well, overall that house has cost you £5,000 or £10,000. So it's not too bad overall. But you can go and scale these up. So with BRR, once you've pulled your investment out, you can go and use that same pot of money to go again, to go again, to go again. So we all know roughly the housing market doubles every 10 years. So if you can go and get, 4 BRRs in a year, in 10 years' time, you're going to have a portfolio of 40 houses. Then the more important thing about BRR, which I like, is it's a generational wealth strategy. So not only are you creating a portfolio for yourself, you're creating generational wealth for you or your family to come. So, like I said, in years to come, we probably won't be here in the future and vice versa, but the properties will be. So what you're doing is you're setting that financial benchmark for future generations to come. So everyone will always look at you in that family and go, oh, he was actual reason why I'm now able to, I've been born into a family, but I don't have to go and get a job. I can keep going with property.
Okay, but I'm a busy investor that's cash rich and time poor. I haven't got the time to go and conduct refurbs. I just want to stick my deposit on a house. Mm-hmm. I mean, what can you suggest? I want to be earning money from this buy-to-let straight away. I want to be earning from my investments straight away. So how can you combat that with the BRR strategy?
Great question. So there is a lot of people out there that, don't have the time, they might have the money, they might want to get into the industry but don't have the education. You can go and do things like joint ventures where, some people can go in. Basically, in a nutshell, it's a 50-50 split. If you're putting the money in, the other person's doing all of the work, and then it's just a straight 50 on the profits as such. So joint venturing could be a good opportunity for you if you haven't got that time there. Or what you could do is you could go and put your power team in there to conduct the refurb anyway, and you can put a project manager to oversee the project. And all you've got to do is maybe go on site once a week and just keep getting updates with how that project's going. So you can combat, rather than you actually doing the refurb, having teams to come in and actually conduct it from start to finish.
Well, it's quite a hard argument from my point of view, trying to defend buy-to-let right now, because there's only one answer here. There's only one answer, and that's BRR. It is such a better strategy all round. For money in, because with a buy-to-let, you're going to have to put 25% of the property you're going to have to put 25% for a deposit on the property for a mortgage, and the average house price in the UK at the moment's £250,000 to £300,000. So 25% of 300,000's 75,000, I believe. Okay, so now I have to put 75 grand in, then I'm going to have to pay stamp duty tax on that, as well as the rest of my legal fees, to only potentially earn £200 to £300 a month.
Yeah.
I mean, it's a bit of a no-brainer when you come to think of it, and versus the BRR strategy for wealth creation.
The only thing with buy-to-let which would apply to someone like Matt Fidesz.
Yeah.
When we were speaking to Matt, he just does
really
buy-to-let. But
yeah.
Matt's got a lot of money behind him. So for him, it's just a case of, right, buy a house, buy a house, buy a house. And he can just buy multiple off the back. Like, he doesn't really need to worry. But for a first-time investor that's coming into the industry, I think buy-to-let is more known. I think buy-to-let's been around for a lot longer. So it's naturally, someone associates with property, it's buy-to-let. But it's not until you actually start to understand property and understand what the other options are out there for you, which you can discover other things that you could go and do. So buy-to-let is probably the most recognised. However, if, like I said, if you're going to put your deposit in there, if you're putting 75 grand and you're making, I don't know, 300 quid profit every single month, how long is it going to take you to break even to get 75 grand back from that property, or even get an ROI? So, it can be... It is a long-term strategy because you're holding the property, but it's also a long time for you to get your money back. Where with BRR, you can go and get it back very, very quick, all or most of your money. So I'd say if you're just starting out in property, or you've got a bit of money behind you and you're debating whether to go down the two, I'd go down BRR and recycle it. But buy-to-let probably will appeal more to people that have got a lot of money.
Yeah,
they can just go and they could just go and put the money, and they're not worried about getting a break even or return.
Okay, so HMO versus serviced accommodation, our next debate. So I tell you what, I managed our serviced accommodations, so I can be SA and you can be HMO.
Yep, all right.
Yet again, we can seem to be a little
We're
bit biased.
Just a bit biased on this because, yes, we had service accommodations, we had HMOs, but we was predominantly HMOs. That's what we were known for. That's what the brand was known for, the company. We was HMO dominant. So to be fair, there's counters for both, really.
I think this is going to be a lot better.
Yeah, you go on. Tell me why you'd want a serviced accommodation.
Why you'd want a serviced accommodation? I mean, because you get to more than quadruple your money versus a buy-to-let. I mean, all you have to do is work out your end user, work out your area, and I mean, if you've got, it's like for us, we had a service accommodation unit quite close to where HS2, where the HS2 line was. Now, all we did is marketed to people in the HS2 line, and we were getting long-term bookings. Okay, now these were people were paying like $3.5 grand a month, depending on the season, and we were just profiting $2.5 grand.
Yeah,
a month.
About two.
It was unbelievable. But in terms of serviced accommodation as well, the guests haven't got any tenant rights. So if they decide to stay in the property, you get to remove them legally, as long as you don't do anything illegally. And you
might have to educate the police on that, though, as we found recently.
Yeah, as we did find recently. But yeah, I think service accommodation is a great strategy, especially if you're starting out as well, because it's going to teach you a lot about property, how to negotiate deals, how to actually find deals, and the strategy's in demand. I mean, in London at the moment, it's crazy. We were paying £350 a night at our serviced accommodation unit. At the Airbnb that we were staying at. I mean, £350 a night, and he was booked up for near enough the entire month. Mm-hmm. So I haven't got a calculator with me now, but you do 350 times 30.
Yeah.
That's absolutely crazy. I mean, you're getting $3.5 grand for 10. So you're getting near on 10 grand for that property a month. And if he's paying £2.5 to £3 grand rent, bills aren't going to be any more than £500-600. And then if you even say you just said £1 grand all in for bills, you're still making £6 grand a month from that one property.
Yeah.
I mean, what other strategy can you achieve that in?
I mean, service accommodation can be really lucrative if you've already got a business or you're very, very little bit struck for time. Service accommodation could be the option because, yes, you've got your guest communications, but if you can structure it correctly and make sure that you've got the right processes, procedures, and systems in place to go and run a service accommodation unit, then it's only really the guest communication. And to somewhat degree, that can kind of be bypassed anyway. So service accommodation is much more quicker to get all up and running and get operational and start making money. Obviously, HMO, you're going to have to go fill the rooms and get them out there. But with service accommodation, yes, you can achieve a higher margin and you can just stack them all up. The con for service accommodation is, you're playing it month by month. Unless you can get long-term bookings in, then, you're kind of playing it by here. You don't know at what rate you can grow. Where HMO, you're guaranteed a specific amount every single month. Yes, it's capped for however long you're going to do your tenancy with your tenants. But however, at least that's how much you're going to be making every single month. So you know at what rate you can grow and at what rate you can take more on, etc. So both of them, I think this is probably the most, how do I explain it? I think equal debate really, because they've all got positives in their own right. They've all got negatives in their own right. I think negatives with obviously HMO, you're going to have potentially people with late rent payments or not paying, or you can get the room trashed, but the same with service accommodation, you could go and have a party in there and it could get trashed and you've got to go and pay it.
Procedures you can put in place to prevent that.
Yeah.
But the thing is with HMO is, like you said, you can forecast what you're going to be earning. You can also, forecast what you're going to be earning. You can also pick and choose, if you're self-managing, who's actually going in there. I mean, also, if you've got one room vacant, you've got other rooms that are going to be bringing you in income.
Yeah,
so that erases the whole vacancy thing, like buy to let. And
but you can do this with buy to let though. I don't want you guys to be thinking that these strategies are just for rent to rent. You've got HMO and SA that you can do within buy to lets. You can do them with BRRs. You can do a flip conversion. These strategies are end strategies that you can then do within the property across all of them. Really,
these are super rent strategies, aren't they? So these are strategies you want to implement into the rent to rent basis, because if you are doing a rent to rent, you're going to be paying rent. Well, you're paying rent anyway, so there's the market rent. So you need to implement a super rent strategy to even achieve a higher yield in rent. But HMO is absolutely fantastic. We loved it because it was guaranteed. You could forecast it. I tell you what is another con for HMO though. Having to fill the rooms can be a bit of an issue, because if you're traveling, we were traveling an hour every day to Coventry to actually do all our viewings. Now, another thing is, doesn't matter how many times you confirm it, people will not show up.
Yeah.
Like, they just won't. I mean, people experience this across the board in all businesses. But I remember going to take 4 viewings one day and not one of them shown up. So that was a bit of a kick in the teeth.
I've had that.
But then the beauty of serviced accommodation is you don't actually have to go out there as often.
No.
You can manage everything from your phone and from your computer. But with a HMO, you're going to have to be going out there until the property's filled.
Yeah, I think with service accommodation, as long as you've got someone that's a good power team around you, so you've got tradespeople if something goes wrong that can come there at a moment's notice. And the good thing for us is we've got a fantastic cleaner.
Amazing.
Our cleaner is pretty much a property manager on its own, but she just doesn't ask to get paid for it. So, we just pay her a cleaning rate every time she does a clean. But she's on hand and she pretty much does the majority or fixes the majority of the issues that occur there anyway. So the time spent for us to go over to the properties is very, very little. So HMO and SA, again, they've both got pros, they've both got cons. They're both brilliant strategies that will make you a lot of money if executed correctly. But it comes down to your personal preference. Have you got the time to go and do HMO? Have you got the time to go and fill the rooms? If you have, then that's absolutely fine. Do it, because you will make a lot of money from it. It's a cash cow. You can stack these up and you can start to get volumes. Service accommodation, yes, it's more lucrative. You can go and achieve more money per month. You could even go and get these near arenas or, really, really affluent areas or airports. So, you could really, really boom the service accommodation side of it. But again, I'd say it comes down to time. It comes down to personal preference, which one you want to do. If you've already got money there and you're not relying on the property money, then service accommodation might be for you. If you're looking to actually grow a business, HMO might be for you. So it comes down to your circumstances. It comes down to, which strategy really, really appeals to you most. And that'll be the one that you go down. For us, we did both of them, but we just loved HMO because we loved the stability of it.
Okay, agent versus vendor, which one is safer? So I'm going to be the agent in this case.
Okay. And
you can be the vendor. So personally, 100% agent. All you need to do is get one agent on board, and then you've got essentially a river, okay? Because then you've constantly got deals flowing to you, because the agents hold these deals. You think about it, you have to go pitch your idea to a vendor that may only have one property. Yeah. But versus if you pitch your idea to an agent and they get on board, they've got a supply of properties. They've constantly got properties coming on board. So for me, it's 110%, whether you're doing rent to rent or you're purchasing, it doesn't matter which way you do it. An agent is always going to be the better one to go down.
Okay, cool. So vendor, what's a vendor? A vendor is just a normal landlord that's just renting the property out of himself. Now, this can be much more easier to go and get because you're speaking to the decision maker directly. So if you wanted to go and get a property on, the chances are you could do it much easier going down a vendor because agents are going to hit you with objections. Kyle is absolutely correct in what he's saying. Having an agent on board will do, mass amounts of difference for your business. But I do know a lot of people in this industry that only deal with vendors directly. Okay. Now, you can go and find a vendor that's got a large portfolio. We have got deals from vendors directly before. They're much simpler to get on because, as I said, you're dealing with a decision maker.
You've not got to pay any agency fees.
You've not got to pay any fees like that. The process is quicker because at the end of the day, they just want someone in as well. Rather than an agent, they've not really got that pain point. So, going to a vendor that, yes, you might have someone that's got a large portfolio. I mean, I was speaking to someone not long ago and turns out the guy actually owns half of Leicester, which is where I live. So, trying to find people like that, then yes, that could be really beneficial for you. If you're just going from vendor to vendor to vendor because they've got single properties, then yes, you may grow at a slower rate and you're building rapport with someone that you've kind of got a bit of a dead end with rather than an agent. If you're building that rapport with an agent, they're always going to get a stream of properties come through and they can come to you when they've got something. Depends on how you've structured your rapport building and how you've structured, your referrals and how you've spoken to them about actually getting the properties off them. So, vendor, just to summarise it, have you got anything else to add?
Yeah, I actually have. So with an agent, dependent on the agent, they might not like the idea of rent to rent. There's a lot of agents that completely discount it when realistically they have to offer all options to the landlord because it is a great strategy. I mean, the benefits that landlords get: guaranteed rent, no management or maintenance fees, no vacancy periods. They don't have to pay the bills.
Guaranteed.
Yeah, it's complete. The rent is guaranteed. So for an agent to turn around, and it's on a company let as well. So if the company didn't pay rent, they've got no tenant rights, they can be out the property within 4 weeks. That is completely abolished with the AST contract. So some agents just don't like the idea of rent to rent, but realistically, if they're offering a good service to the landlord, they need to lay out all the cards on the table. Because for me, if I was a landlord, if someone turned around and went, right, they're going to give you £200 less than the market rent, however, they'll guarantee it for 5 years and you're going to have no vacancies, I'd take
it. But let me just recap on something that you've just turned around and said. You're absolutely correct with how agents don't like the idea of doing company lets as such. The big reason for that is cowboys. Would you agree?
Completely agree.
There's so many people. Beforehand, agents loved company lets, okay? You could go and get one whenever. So I'm told, because this wasn't in my lifetime within property, as much as I'd have absolutely loved it to have been. But the reason now is because a lot of companies have come on and just watched a YouTube video or heard about it or read something and thought, I can do that. And the truth is you can't. There's a lot more factors that are involved with running rent-to-rent properties or just properties as a whole. And if you've not got the right education or you've not got the right team around you, you're going to fail and you will just give yourself a bad name, okay? And that's the whole problem now, is because cowboys have come onto the scene, thought they know what they're doing and they don't, and they've ended up messing up in a spectacular way, which has either cost the agent their reputation, time or money, and as well as landlords having to go and fix problems because they've not delivered on what they said they're going to do. It's now put agents on the back foot towards company lets, and they're a little bit more trickier to get. So an agent will qualify you pretty much to make sure you know what you're doing now, because the majority of them have been stung before. So it's not the fact that they don't like it, is they're just fussy with who they want to actually work with. And I get that, because as I mentioned, there's so many cowboys that have come into the industry and have ruined it for the true investors that actually know what they're doing and they're here for the long run to make money and deliver a good service, because it is a good service overall, isn't it? You're offering a very good package.
Service. Well, I mean, our landlords absolutely loved it.
Yeah, loves it.
Absolutely loved it.
Yeah, ours just leave us to get on. Do you know what I mean? Yeah, it's absolutely brilliant. So, yeah, that's kind of agent overall, and so with vendor really. Like I said, vendor's a bit easier. Agent, if you can get good with an agent, then you've got a stream of properties coming through. Cool, but thank you very much, guys, for jumping on and listening to Kyle and myself on episode 1, Trade Property, the Power Hour. Now, if you want to learn more about property, or you want to get into property, or you might already be a seasoned property investor that just wants to learn more and take yourself to that next level, we're actually going to be leaving the link below to actually come and work with us directly. You can come and join our free webinar where we're going to be sharing the secrets to property investing and deep diving into the strategies, as well as giving you a very, very, very in-depth overview of the little things you need to implement to make sure that you're successful within this industry, okay? So if you're wanting that help, you're wanting that knowledge, you're wanting our guidance, then make sure you get yourself in the comment section below and sign up to our next session. But more importantly, if you have enjoyed listening to us this afternoon, then, make sure you give it a thumbs up, make sure you give it a like, give it a review, give it a comment, okay?
Share it to a friend.
Exactly, because as you've seen these Q&A sessions, put your questions in, because we want to be including you on episode 2 of the Property Power Hour. So again, thank you very much for everyone that's listened in, and we'll see you next time.